Hey, we're back with you here again live. It's Malcolm Out Loud here, and great to have Harry Dent back with us again. And what I want to do in this next segment with you is I want to talk about some of the things we can all do to do our best to try and prosper through a decade that is going to be incredibly tough, incredibly difficult. A lot of belt tightening going on in the private sector for sure. Government's going to have to follow that. If you follow Harry and you follow my conversation and what we're talking about here, folks, the public is going to have to fall in line. There's just two ways about it. It's called gravity. And we're going to have a little gravity here just ahead here. So, again, it's Malcolm Out Loud here. Harry, thanks for being back with me, buddy. And I always like to do a little bit of positive with you because there is a positive side to some of these things, and you're just, I want to talk about this. Now, one of the things, you've got a newsletter out you call Survive and Prosper, Harry, right? And you can find it at harrydent.com, by the way, where you get the link to go over there. And it's a whole site.
And it's free. It's a free daily newsletter.
It is daily, too. Yeah. Okay, and that's where you put out tips and things. So you're spending a lot of time writing and putting information out these days.
Yeah, we educate people so they can get the truth and understand where we're coming from, which is very different from what you're hearing from economists.
Okay, so let's bring it forward right now. We find ourselves in the first quarter of 2013. We're in a second term of administration that has played with dollars like monopoly money. We know this. But I don't want to talk so much politics in this case, but I want to talk about you folks out there. I want to talk about how we can help you, what Harry thinks we can all do to sort of stay in line, Harry. Let's talk about that. We see the market right now climbing high. We see a lot of things going on. There's a false sense of security out there. We also see there's a lot of conversation. I don't know. I want to talk a little bit about gold ahead here, too, just to give everybody a peek here. Gold has been going through the roof here as well. I don't know what your feelings are on that. But let's take it back for the average person out here, that needs to try to shelter themselves a little bit from some of the crime and criminal activities that are coming down the pike, brother. What do we do at this point?
Well, first of all, you got to understand, bubble burst. Now, we had natural bubbles in technology and demographics, the baby boom. Well, now it's government bubbles. It's totally stimulus-driven. But the point is, we keep crashing, and then we bubble back up with trillions of dollars of stimulus, and then we crash again. That's happened since 1995. We've seen two major crashes. We've probably got another one coming somewhere between late 2013 and early 2015. That's our next danger zone, so not quite yet. So you got to think like a long-term trader instead of a buy-and-hold investor. When things bubble up like this, we're back near the highs in the Dow and S&P. We hit S&P 1580, 1600, slight new high. We're going to tell people this is the time to back out of stocks, wait for a substantial correction. Once things have kind of crashed and sorted out, then you get back in because you can't be out of these markets. I mean, the market's up over 100% in the last 4 years.
Harry, take for a second for me.
But it crashed first.
Yeah, take a sec for me, please. And Apple, okay? Apple had this stock that grew to, I think it was around $700.
Yeah, $705.
$705. Thank you. I thought it was somewhere around there, and I thought. Now this is just me speaking. Now I don't know anything like you know about this. I'm going to profess at this point I am not the expert. Harry is. So, but I do have logic and common sense, Harry. So all right. So the thing collapsed to 700. I started to say to myself, there's no way that thing's going to be able to sustain this kind of growth and the way it's on, no matter what they come out with. I mean, the products are crazy. I get it. People love them. We buy this stuff. We use it.
But
I get
Samsung makes them too.
Well, and they've been playing against them. But so then they started to fall, and I think they started to crash down to two and change or something.
No, they went down to 440 or something.
Oh, I
like
thought
that.
they fell more. Is that all?
But this is what Wall Street does. It makes you a darling. Everybody piles into like Green Mountain Coffee or Starbucks or something. Right. And then all you do is slow your growth. They're still going to grow, but they're slower growth. Now they're considered a value stock, and now they're not the darling.
And Harry, they didn't do anything wrong.
So they'll probably go sideways for a year.
And they didn't do anything wrong. But if you bought stock at $600-700, you're screwed.
Got killed.
You're screwed.
But the same with these bubbles. Everything's a bubble. Gold's a bubble. Exactly. Bonds are a bubble. Investors, the government's forcing people to race into investments because they don't give them any yield on a bond anymore. Right. The government took that away to save the banks.
Right. That's right. All right. So gold. Let's touch on that a moment. Was it close to 2,000 an ounce or something?
It was 1943. I think it hit.
Thank you.
It has corrected substantially.
What is that at now?
16. It's fallen like a rock here recently.
Is it
15.70 today?
Okay. Good thing I cashed out.
I saw it. and it's got strong. It's basically been going between 1520 and 1800 for a year and a half. It's going to break one way out of that or not. I think it's going to break up and then down again. But I think gold's ultimately a bubble, and people are going to get killed in it.
I cashed out. I pulled my gold teeth out, and I cashed them in, by the way.
Glad you did.
So people made some money with gold, and people lost some money, didn't they? Like everything. But you're saying all these things are very reactionary.
But everything's a bubble. That's
right,
the point.
bubble. We're very reactionary.
So
yeah.
when
know
things
when to buy.
bubble up, you got to get more defensive, pull money off the table. You got to think opposite, and you just can't listen to the news. Every time the economy comes back, like now, early 2013, everybody's bullish. The government's fixed the cliff. The government's fixed the debt crisis. Europe is turning around. Well, Europe's not getting worse, but it's not turning around either. And Europe's got the capacity to sink this economy any day, like 4 states did. California, Nevada, Arizona, Florida. And the subprime crash. 4 states caused the last global stock crash, triggered it. Well, it happened because there's so much debt and demographics are slowing. You can't trigger that without it. But so you got to know that things have not been fixed. Our debt's only higher now. It's not lower. If I saw debt going down, I'd say, hey, we're getting somewhere. Government's going to have to cut back spending to some degree. That's going to hurt. So you got to be looking for trouble. And all we do now is say, look, here's the times where we think you're most vulnerable. Mid-2013 to early 2015. If we're going to see another crash, it's going to happen then. And then late 2017 to early 2020. Right. By then, the demographic trends kind of bottom out.
So right now, mid-2013 till
early 2015. That's the next crash zone. It might be 20 to 30%, but if we see a full bubble and burst again, it'll be 60%.
So you're talking about a year and a half, basically. Yeah. Is that correct?
That you need to be defensive. The rest of the time, if we don't see a major crash or only so much by early 2015, we'll probably tell people, okay, get back more in stocks and basic investments and things.
So knowing when to jump in and when to jump out of these things, are these some of the things, can I just assume that you're discussing in Survive and Prosper?
Yeah.
Yeah, I would assume, right? It's kind of information you're throwing up.
We educate people what's actually going on and give people strategies.
I've seen some of your stuff, and I love it. But that's what you're doing. So you're trying to educate folks through that means.
And people don't understand. I mean, you can short stocks and make money in a downturn, but if you're just in cash when everything's falling, you buy everything 20, 30, 40, 50 cents a dollar. You're making money by just being safe for a year and a half.
And people do that. And that's how they make money.
Most people don't. Most people are piling in the market now thinking, well, we waited for years after the crash. Now it looks pretty good, and the politicians and economists say it's okay. We're okay. No, we're not okay. We're in an aging bull market.
So now's not the time.
We don't see the signs we're there yet. We think by about summer this year, June, July, August, we're going to top, not a lot higher than here. And the market's going to start going down again.
All right, so I think you're wise. I totally agree with what I mean, again, I think that's good advice for all of you out here to listen to what Harry's saying. You better be real careful. I think you better have both eyes open as you start to look at these things very clearly, or you're about
Don't even believe Warren Buffett. I hate to say it. Warren Buffett's become a cheerleader for the U.S. government because they cover his back and his investments. And I tell you, he shouldn't be talking about the economy. He's a great investor.
Oh, it's
a different
terrible thing. Well, I always laugh at these guys. I got to share with you the Warren Buffetts, the Bill Gates, the Al Gores. I got to chuckle at these guys. They're always wanting to, we'll sign more checks. We all want to pay more, but they don't write checks to the federal government themselves unsolicited. Who said they can't? And at the same time, you got to laugh. And then when Al Gore made this deal, we talked about it on radio with Al Jazeera and bought them out, which really pissed off a lot of people in this country. He made a nice piece of change for his pocket, and he made sure the deal happened, so he didn't pay the higher tax consequence for the end of the year. So I think it's really their words don't meet their actions. Do you follow me? It's one thing to sit there and boast about, taxes till it hurts. We're good with that, man. Am I right, Harry?
But to me, though, what I've learned, do what you do best. Warren Buffett is maybe the greatest investor in all time. That does not make him an economist.
There you go.
If he understood what I understood about debt and demographics, he wouldn't be telling the U.S. public, things are okay and the government's doing the right thing. Pulling trillions of dollars out of thin air to cover over a debt crisis is the right thing to do. This is a 10-year-old can understand.
Right, that's right. Yeah, and 10-year-olds do understand it.
It's insanity.
Yeah, but our government officials don't understand it, or they can play the power game. And it really does come down, folks, to the fact that they're okay with it if it doesn't happen on their watch.
Exactly.
That's all it's about, man. It's like a clock. If you can watch the clock. Now, let me see. I leave. It's like, think about this moment. I leave the office at 5 o'clock today. If something happens at 6, you know what? It ain't my problem. I ain't in the office, Harry. Right or wrong? Right. Yeah. And
that's why everybody's pushing. Central bankers, politicians are all pushing this down the road. They're assuming it'll get better at some point. I study demographics. Baby boomers are just going to spend less in the next decade. Less and less. So it's going to take more and more stimulus which is just isn't going to work at some point.
All right, so right now then, so your suggestion is be careful, have both eyes open, survive and prosper. I want to bring you back to Harry's newsletter again. You get it at harrydent.com. Take a look at it. And I know you throw these tidbits out there, but it's just about knowing when to buy, when to sell, when to get in, when to get out, when to do it. Now's got to be careful. Now's not the time in these next few months maybe to be giddy. And
giddy. Everybody's giddy right now. That's
I see a lot of that. That's a good word probably at the moment. I do see it as well. And there's this crazy sense I get out there that people just don't see. They're in denial. What do you think happens with the reality when this reality check happens ahead? There's going to be a lot of blame gaming going around, Harry.
Well, there's going to be that. But first, the government's got to fail. My biggest question is, in 2008, the government was caught by surprise by the subprime crisis. They didn't understand it. It came out of nowhere. This time, they're poised. They're ready. Every time there's any weakness, they put more money. They're ahead of the game. How long can they keep cushioning the economy before they just lose control, before Spain blows up, or something happens, or these 3.7 million foreclosures? People say the housing market is going to bear. There's still 3.7 million foreclosures sitting out there.
I know.
How are you going to work that off?
All right, our final minute or two then. Best advice, beside what we've said already, what else can people do right now? Where should they put their money, and what little they have left, brother?
Well, later this year, by the summer, get more in cash and short-term bonds. Just say, look, I'm not going to make any money for the next year and a half. I want to avoid the next crash and then reinvest. So get out of stocks and risk on assets. If gold does go up, rally one more time, which I think it may, get out and don't buy real estate. Everybody's saying the real estate thing's over. The real estate thing is not over. If you look at Japan, real estate's been down now for 21 years and never bounced. Why? For every young couple that would buy a house and have a family, if they even have the guts anymore with a bad economy, older people are dying.
Well, it's cheaper
freeing up
right.
housing.
Right.
Real estate, I'm telling people, people got to get out of love in real estate. Be in it if you're going to live in it or use it or rent it. Real estate will never be the same again with a smaller generation following the larger.
Kidding.
It will never
so
be the
it's
same
no longer
again.
the
Not
investment.
even in the next boom will it be going up at
so
5-10%.
it's no longer the investment it was 20 years ago.
It's a place to live, or you could buy
so whether you're
it, rent
renting
it
or
out,
leasing or what have
rent
you.
it for
Well, it's like
income.
a car payment. If you're going to drive around a new car, you're always going to have a car payment, Harry. Oh. Right or wrong? I subscribe to that theory. Unless you're going to keep a car for 20 years, but who the hell's going to do that anymore? So, it's one of those things. They're liabilities, not assets,
But my opinion, I would tell people wait until at least early 2000 to mid-2015 to consider buying real estate.
At the earliest. So, well, again, I love it, Harry. It's good stuff. Listen, folks, I think you got to just be in tune. HarryDent.com. I like what Harry talks about. I think you got to check him out and check out what he's saying, his message out there, his books. Understand a little bit more what's going on out there. You don't have to agree with everything he says. That's not the point here. We all have a difference of opinion. That's not at all the issue. But take a look. Protect yourself. Be warned. Know that there are things you can do to sort of get through the wind tunnel that's headed our way. And don't expect government to help you out, I can tell you now, because when you-know-what hits the fan, they may not be quite there with all those entitlement programs, my friend, that you've all, many people sadly have come to rely on. And I don't relish the thought, quite frankly. But Harry Dent again, harrydent.com. Again, best-selling author and just a great economist, somebody we count on here to stir the ship properly. It's Malcolm Out Loud. Thanks for joining me. Get involved, get loud, and think on the brink.